Hey guys, Mike here. So boy, we got a crazy week ahead with a huge, enormous amount of earnings coming down the pipe this week. I mean, these are the stocks that have run this market up, that hold it up, that make up a huge percentage of it. And we got a whole lot of them reporting this week, plus a lot of other stuff going on with economic data. It's going to be flooding the news networks and the market, okay? And so we're going to get into all that right there, plus some surprising data that came out Friday, which I'm going to share with you. And so the data's all over the place, a bunch to do with the charts and everything. But I did want to start off with this right here. This is an interview that one of our members shared that I've actually never seen it before. But what am I always talking about? Two big things. The market is an addict, right? And what does its fix? Liquidity. That's why liquidity drives markets over anything else, right? And so this is an interview with Robin Williams after the '08 crash, when he's asked to describe basically what happened or what he thinks about Wall Street. And I laughed out loud when I saw this. I watched it 3 times. So let me know what you think in the comments, but hopefully you'll get a laugh as well on Sunday here.
I talked to them about being like a group of junkies who've relapsed, going, listen, man, I just need some liquidity, you know what I'm saying? I just ran into some bad subprime, you know? We just had complex formulas. We just didn't factor in greed and panic, you know? I just need $805 billion by Tuesday. Yeah, no, seriously. No, I would not screw you again. It's pretty crazy.
I've learned my lesson.
No, baby, this is not like the other time. Seriously, just throw me a bad here, baby.
Just give me,
help me out.
Just give me a little bit.
Yeah, just a taste. That's all I need is a taste. I need $2.5 trillion. I'll pay you back.
And so hopefully you got a good laugh at that like I did. And so, let me know what you think in the comments, because to me it describes Wall Street, the market, like just perfectly. I could not have said it better myself. Now, the surprising data that came out Friday, because remember we got the Philadelphia data come out and it was terrible, was S&P 5 Global Flash US PMI Composite Output Index. And supposedly we are not in contraction anymore. We're in expansion, because anything above that zero line is considered expansion in the economy. And they're looking basically what the data says. 2% GDP growth, which is nowhere near what people were really expecting. And so again, you got this data all over the place, because really what happened was the services part of it came in better than expected. And of course, what are we? 70% services. And that's, I don't know if you guys can find it. I really couldn't find it, but I'm curious to know from 2000 to 2010, what percentage was our economy services, right? And so, now we're 70%. I'm assuming there's nowhere near what we were at. And so we're seeing this, manufacturing data come in, and we'll get a lot of it this week, which we'll talk about later. And when your economy just we don't really make a lot anymore, because we outsource everything to China and South Korea and everything else you can imagine. And so it's all about the services, and it still keeps coming in hotter, right? And this is the part where if you hear Jerome Powell speak, they're having a hard time bringing this down, right? I mean, wage growth still growing, employment, everything. And so that's the thing. And people say, oh, we're in a recession. No, we're not, because of the services sector. That's why. And I think that's why you're seeing, and I'm almost wondering, like, if you're having this rolling recession where it's like, yeah, if you're in an industrialized part of the country, maybe you feel that way, right? And that's why you're probably trying to lower your child labor laws and stuff to fill those jobs, whatever it is. But maybe, yeah, it's slowing down a lot or something and you're feeling it. But if you're in one of these, like Florida, for example, we're big time services. So a big tourist attraction place and everything, we don't feel it at all. We don't feel like nothing. I mean, we're rock and roll like it's 1999 around here or something. And so, let me know how your area is feeling. But that's kind of, what I'm thinking here. And if that continues to happen, it's hard to be in a recession or go into a recession, and why it keeps getting kicked back, because of the services industry and stuff. And the other thing you got to think about, and somebody mentioned this in the comments, why I bring it up and looked at it, was the fact that HYG, of course, high yield bonds and stuff, are still ramping up. And when they go up, the market goes up. But if you look at what's happening, this is what you got to pay close attention to, is that U.S. blue chip bonds are being downgraded at a very high rate right now. And so when you look at this, you can just see the amount as far as in the billions and stuff. And when you look over here, you see 2023 already. We're not even through April yet. And you see already we're surpassed a lot of these years on the list. 2020, obviously, because we shut down the world. But, I'm looking to see, we already passed 08. I'm looking to see, do we pass 09? We're projected to, as well, as far as downgrading these high yield bonds. So that's something to keep as well. Again, as HYG goes up, usually the S&P goes up. If you see HYG going down and S&P still goes up, that divergent usually means the bond market knows something. So we'll keep an eye on that. And that kind of gets us right into the charts and stuff. And understand, obviously, look at that trend line that we broke the other day, sitting here, and what surprised me is you got a bunch of earnings coming up, right? I mean, I think it's 31 or 32% of the total market cap is actually reporting this week. And the actual weekly expected move from the options market's 407 to 418-ish, somewhere in that range, which actually came down from last week, which was kind of surprised. And when you look at it right dead in the middle of this, obviously, but we broke this trend line. I want to see if we're going to come back up and see it as a resistance. You see the MACD on the daily trying to roll over. So I'm just curious if we're going to retest that trend line in rejection, because in hourly, you see the MACD, shorter time frame, trying to roll up. RSI is trying to pass over the 50 line right there. Again, still couldn't make it through that high demand zone right there. And it's hard to get through that. I mean, bears are absolutely defending it like crazy. And a lot of it will depend on earnings. You know, it's going to be one of those, it's going to be, you know, sell the news event or whatever. If all these guys pass earnings, or it's kind of like, you know, a Tesla type earnings where it's like, it was okay. You know, that's what we got to see. And we'll go on those charts just a minute. But, you know, when you look out here on the daily as well, you can see this right here is where the bulls want to get to, right? It's around 418 to get above February's highs. Again, that'll put that gap right there in play. And a lot of people, I know a lot of Elliott Waves folks especially, are expecting this right here to happen, where it goes up on the SPY at least like 431 to start testing the August high right there and stuff. And then what happens from there is basically anybody's guess. But don't be surprised if this happens. This is what a lot of people are calling for. And remember, that's only a 5% move. That is nothing. Okay, that absolutely is nothing. And again, the market's just calling up for something, whether it's going to be down or up. I think this week's going to be able to tell us a lot, because not only earnings, you got a ton of economic news I'm going to show you. And before we continue, guys, if you're getting anything out of this, please hit that like and subscribe button. Think about sharing the video with your friends and family. And if you're new here and you like the content, please hit that subscribe button. I really appreciate it. And that leads me into this interview. I told you last week I'd bring the second half of this interview with Jim Cameron. He actually manages a volatility index fund, and he understands volatility better than anything else. And of course, we had monthly OPEX on the VIX last Wednesday, and then for the stocks and the rest of the market on Friday, right? And sometimes that frees the market up, take handcuffs off them to let it actually move a little more freely. And so he's asked, would you be surprised if, you know, we got to new highs on the market, right? Which would be surprising in a way, because now you have so many other alternatives that, you know, people are investing in, and big money is investing in. And I'll show you one of those tomorrow as well, which is becoming a big thing.
New highs, I would be very skeptical of. A blow-off top of some kind, I think, is likely. And the reason is, as I mentioned before, this is how markets work. You need to squeeze shorts. You need people to lose conviction, not people, just institutions, entities betting against the market, to lose conviction in that short. The narrative has to change in order to lose that conviction. And generally, that means some type of move up. There are several ways that this also technically, structurally works in markets as well. One, you unpin vol supply. At some point, on a fixed strike basis, as you go up, vol is actually sliding to a much lower vol. If it's too low a vol, that brings people in to buy vol and supports underlying fixed strike vol, raises structural vol higher, and reduces supply in the market. This is something that most people don't understand. There's a reason vol tends to go structurally higher into the last parts of a rally. It's because you slide to higher. That unpins volatility. It squeezes short exposure. It's very simple as nature, right?
Which we haven't seen yet.
We have started to see a little bit. We've seen it at different points. Again, before the last decline, we were starting to see it. Again, I think if we get that last, right, kind of, 5%, maybe even more, I think we'll really start to push people back in and the narrative will change. Lastly, you're creating potential energy, right? It's just like pulling something off the ground. If you pull this market 10% higher from here, you have 10% more realized potential for something more volatile, more intense to happen. And this is why markets tend to end in the way they do.
Okay.
Yeah.
So as a heads up, basically, for when that potential energy is realized to the downside, you still look for when stocks are firm, but vol starts to rise.
Correct. Market up, vol up is generally one of the best indicators, especially if it can continue for weeks, right, over some period, that something bigger is coming, because, again, it is unpinning the market ultimately and reducing some of that vol supply that is ultimately pinning and supporting the market.
And so let me know what you think about that in the comments. But when you look at the S&P right here and you pull out, I mean, look at what's been going on since May. Like right there, this sideways market. That right there is about a 9% range. You got a few drops below, a few breakouts above. They weren't long lasting at all. But that is just where we are at. And if you notice, that 5% lines up with that August high he's talking about right there. And so that would definitely squeeze the shorts out for sure. and start getting more people involved and pulling people in and stuff. But, when you look at it as far as like the options this week coming up, what people are expecting for Friday's expiration, you got a lot of calls, 416, 420 right there, but then look at all the puts, right? Again, more puts out there, a lot of bearishness right there. And I do want to make one thing clear, just because there's a lot more puts out there, just because you see a lot of people more bearish, doesn't mean it can't go down at all, okay? I mean, this is back in 08, right? This was 07, I believe. And if you look, anything below that zero line, that top move up there, that is where the S&P 500 net non-commercial futures were, so it was negative, right? People were just more short than anything else. And look what happened to the market, right? It actually fell off a cliff, if you see right there. And so it doesn't mean it can't go down. But again, in that moment, and I keep talking about this, there was more black swan events. You had literally Lehman Brothers and all these others going under at this point in time to push it down. It just didn't sell off. In order for a market to go down rapidly, people have to be willing to sell. And usually there's an event that takes place on that. One thing that will not take place for a while is going to be the Federal Reserve speakers out there, because they're in their black out period. And so until May 4th, you're not going to hear their mouths yapping. Again, let's listen to the guy from Wall Street Journal and see what he has to say. That's who they leak their information to. He's called Nicky Leaks, so I'll keep you updated if he says anything. And so leading into the Qs, again, what's it doing? Nothing. It's just absolutely just staying right there in that really, really tight range. Looks like, I mean, obviously looking at the RSI, MACD, doesn't look super bullish or anything. It just ain't really doing anything at all, right? There's no real momentum at all going into this. And you can see the weekly expected move is 310, around 322-ish, somewhere in there. So it actually didn't move. And that's another big surprise. And you see on the RSI, slight divergence there on the RSI. We'll see if that starts to play out. It's telling us something. Again, earnings might have a whole lot to do with this, depending on how the market anticipates. But again, on the hourly, you can see RSI is trying to maybe do a bullish cross there, RSI over the 50, but we'll see. And understand, I mean, this is not a type cheap market. And because you look at this chart, you compare the NASDAQ and the S&P when it comes to their price to sales ratios, and you can see there's a dot-com bubble over there, and you can see where we're at now. And I'm going to draw this line. And we're actually higher when it comes to the price of sales when you're comparing S&P and NASDAQ versus the two time periods. So it's not like a cheap market at all. And that's surprising because now you have all these other alternatives. You have high interest rates. They may still be raising. They may still be keeping where they're at. So, it's just a very strange market, right? Now, getting into the ones that are reporting this week, and then some aren't, but just looking at the big boys here, you see Apple. The surprising thing about Apple was the weekly expected move of the option market didn't move. It's like 161 to 169. You can see still sitting in that rising wedge right there. It's sitting right on that all-time high, trend line, right? Just sitting there. And so, and again, it's one of those things where the MACD is doing a bearish cross, but I mean, it just looks like a mess. I mean, the momentum is just stalled right now. And it seems like the market's just waiting on something, right? And because I think I reported on this for 2 weeks, we've been stuck in this range, right? Where I said we're at this major resistance areas, major demand areas, trend lines all over the place where they've been rejected multiple times. There's 4 times on this trend line from Microsoft. Very big demand zone. Supply zone, above it. You can see it's reporting earnings just like Apple this week. Again, the MACDs and RSIs don't look super hot, but this one has a much bigger range of 273, 298. So it's right there in the middle. And their earnings will probably be, I don't think people expect anything super bad because, the one thing you're looking at is, yes, the cloud revenue seems to be slowing down for all these companies, but also the fact that they do have a subscription service, which people have talked about, which tends to hold up better in times like this. So we'll see how it works out. I mean, a lot of people love this stock. I mean, big money especially, right? Tesla, again, you got these 3 gaps right there. It held up right here, did not continue to sell off into that lower gap down there. And so that was, not surprising. I mean, usually you get these big moves down. You'll see on the hourly why people started buying into this. The dip buyers came in full force and held it up. But again, you're looking at 156 to 174 for a weekly expected move, which is right in the middle of that gap above. And it could absolutely get up there because above that, as a matter of fact, because you see when you gap down, you got this big volume gap right there. And price can move up much faster. You see the RSI on the hourly, how oversold it was. And that's why you got that bounce. But you see the MACDs doing a bullish cross right there. And again, it's Tesla. People love to keep buying into this. So, we'll see where that goes. Let me know in the comments which gap you think is going to fill first. We got 3 of them to pick from. Looking at this options, and this will change every day. But, you got a lot of puts, 160, a lot of calls, 170, And this one has a lot of bullishness as far as calls for this week coming up. I mean, a lot. And so we'll see, because that's usually what happens to Tesla is a lot of calls start rolling in. Market makers, of course, the ones selling those calls, then they have to be the ones that buy the stock to hedge, and that drives Tesla up. And when there's a gap to be filled, especially when it comes to Tesla, it's not surprising. But I don't know any catalysts. I mean, they did raise prices. I mean, their prices are all over the place right now. But now they raised price for the American cars, the top two, if I'm not mistaken, the more expensive ones. And so, we'll see. I don't know any catalysts coming up. But I did want to say, and I hadn't showed a Kathy Woods interview in forever, but I want to talk about this because she's come out with a new target. I think it's $2,000 price or something over the next 5 years for Tesla. But she talks about the robo-taxis. And I want you to hear the main reason why you've been hearing about this forever. It hadn't happened, and it ain't going to happen for a long time. Let me explain why. And again, I'm not a Tesla hater. I'm not a Tesla fanboy. I'm just trying to report basically and show you guys, I've done a lot of research on this, of why this stuff takes so long.
We want Tesla to scale its units because each one of them now represents the potential for a robo-taxi and a robo-taxi fleet. Now, Elon says it's possible that he could launch that fleet this year. We think it's more like last year. But the robo-taxi fleet is really going to be, or the robo-taxi service is going to be, from a margin point of view, more like a SaaS business. And so we think that it's very smart to maximize units because they have so much option value now.
Yeah. I mean, but we've been hearing about the robotaxi fleet for some time. There's a lot of regulatory barriers to all of that, and certainly technological barriers.
And that is the key, the regulatory hurdles. You have to go state by state in this country to do it, which means you have to bribe public officials legally, of course, by donating to their campaigns, things like that, putting pressure on them to try to change the regulatory hurdles. And you got to ask yourself, would you get in a car that doesn't have a driver? A lot of people just ain't going to do that. I personally will not do it. I'll be honest with you. I'm not sitting in the back seat watching something try to drive me around and that kind of stuff. Not now. I'll let them work the kinks out a little more before they do that. But you got to understand, it's more than anything, it's the regulatory hurdles. That's why Tesla took so long to actually get EVs going in this country. And I did a video on this for those who've been waiting long enough, showing you guys exactly what happened, how Elon Musk finally had to break down and start donating to campaigns, suing state governments, all kinds of stuff. But it took years for that to happen, okay? And in America, things move at a snail's pace when it comes to this, because it's all about, who has the most money to contribute. It's not what's best for America or anything. You got to understand that. It's just who's getting paid the most, and then therefore that's the way they'll swing their vote. So that's why you've heard about robotaxis forever. You'll continue to hear about it. Some areas might do it, but it's going to take a long, long time, okay? I'm just telling you now. So if you're putting that in your model, it's going to take a while. Mark my words on that. And I'll visit you a year from now and see if we have robo-taxis. Now, NVIDIA, obviously this one right here, everybody keeps trying to short it up, but right there it just stays in that very tight range right there, and that high supply demand, and that high supply zone right there. And I mean, this is only like a 5%, 6% type area that it's been doing for over 2 to 3 weeks now. And so, and again, you got range 260, 282 on the weekly expected move. You got a volume gap below it. So if it finally breaks that trend line, it can move down rather quickly, right, to around the 240 area. Again, a lot of people are trying to short this thing. And again, you got a little bit of divergence on the RSI when you look at that. Is that going to play out? We'll see. And so every time everything's going to go down, dip buyers come in, keep pushing this thing up, right? Because it just seems like they are cyclical when it comes to semiconductors, and so far they're showing that, and so they're showing their strength. And so we'll keep an eye on that one this week. It does not report earnings. Meta does report earnings this week. You can see broke down out of that trend line, which it had expected. You can call that a rising wedge if you like. And so that broke down. Weekly expected to move 193 to 232, so a big range right here. And so the big question is going to be, is it going to fill the gap below, fill the gap above, or just start trading sideways? And of course, a lot of this will depend on earnings, because this thing has had a huge move up, right? So a lot of people are saying, well, it deserves to be at this price, but does it deserve, more of a premium? That's really the big question. But what's happening? Remember, they have laid off a boatload of people. They continue to lay off people. The market loves that, by the way, because it does save money to the bottom line. And so, you know, we're going to have to see on this one. I do want to see if it's going to come back up and test that trend line and get rejected. That's really what I'm going to be watching for this week. Or does it come down and finally test that trend line there, which goes all the way back to like 08? That's what we got to watch out for this week. As it reports earnings. And speaking of earnings, oh Lord, look at this. These are the most expected earnings, okay? We got a lot more earnings than this. But look, I mean, starting Monday, usually Mondays are boring, not this Monday. So you'll have Coca-Cola, you're going to have Credit Suisse. That's one of the regional banks right there, First Republic, if I'm not mistaken, Cleveland Cliffs. Whirlpool, pay attention, obviously, because when it comes to the appliances, that usually has it kind of tells you like how things are going when it comes to the real estate market, things of that nature, and how we're spending as far as house upgrades, things like that. And then Tuesday's a big one. I'm going to circle the whole thing. Verizon, UPS, Halliburton, GM, McDonald's, 3M, PepsiCo, Spotify, right? Raytheon Technologies. And then the big ones after hours, Microsoft, Alphabet, Enphase, Visa, Chipotle. You just keep going. Texas Instruments. I mean, it is loaded. There will be nothing boring going on this week. Wednesday, Boeing, Humana, Hilton, Hess, Tech, ADP, right? And then Meta, right? Let me put in the comments, do you think it's going to continue to go up? Roku, I think a lot of people think that's actually going to go down, but we'll have to see. Teladoc's just one people watch because it usually gets either hammered or does a big move up on earnings. Thursday, American Airlines, are we still traveling? Caterpillar, Eli Lilly, Valero, Southwest, another about travel. MasterCard, Crocs has been on a roll. AbbVie, Merck. And then after hours, Amazon, Intel, Snap, Cloudflare. Then you'll have Pinterest as far as what's going on social media as well. Amgen. And then Friday's all about oil and things, right? ExxonMobil, Chevron, Cameco, and a few others. So we'll see what happens there. And then you're going to have a ton of data. I mean, this is just loaded, right? I'll go through this every day with you. A lot of manufacturing data, again, is going to come out. We'll have some on Monday. A lot of real estate stuff, building permits, things of that nature. Pay attention to commercial real estate. The S&P, Chase Shiller, home price, month-over-month prices. And the market usually pays attention to that. Then you'll have the Richmond Fed Services Index, the Richmond Fed Manufacturing Index. And then you'll have home sales all over the place. Then you'll have the Dallas Services Index. And then, of course, the next day, all about mortgages again. So a lot of real estate information is going to come out. And so we'll see what that does to those stocks, which have been just on a tear lately. I think it's surprised a lot of people. Stuff about oil and everything is still holding where it's at right now. Then the 27th, we'll get initial jobless claims. The Fed will be paying close attention to this. Continuous jobless claims. Then you're going to have core PCE and GDP, right? And so the Fed loves to pay attention to that stuff. It will absolutely have something to do with their decisions. More manufacturing data is going to be coming out. And then the 28th, more employment. And then, of course, there's core PCE and core PCE month over month. So you have year over year and month over month. Personal income, personal spending, Chicago PMI, Michigan consumer sentiment. And so as you can see, it's going to be a loaded week as far as earnings, economic data, and everything. And so, you know, is it going to be a volatile week? Put your guess down in the comments. I think it is. The question is, are we going to remain range bound in that same range? Are we finally going to break out of that? Start trying to go for the February high this week because, again, I think it's 31% of like the market cap of the S&P is reporting this week alone. All right, and then next week we got another big week, just FYI. So anyway, hope you got some out of that, guys. I know it was a little longer than usual, but it's a big week, right? And I'll go back to the regular length of the videos during the weekdays, between 10 and 15 minutes max, okay? So I hope you had a good one, and I'll see you tomorrow.